Hey everyone, welcome to Precision 2.0. It's our expansion to Precision 1. What I want to chat about really quick is we're not changing the whole course around as much as we're adding a few concepts into it and maybe removing one or two things. For the most part, the first course is still Bible, and for the most part, everything's still in it. But over the last year, the coaches and I have found some things that work a little better and a little worse. And we just thought we could add a few things to basically help guys get more consistent. So the first section is going to be about the weekly cycle and the sessions and how we can tie them into supply and demand. Now, this is a picture perfect weekly cycle. There is probably 6 or 8 different variations of these. We're not going to draw them all out. I'm going to tell you what they are and basically how to read them. So the concept is Sunday when the market opens in Tokyo, it's just a liquidity buildup. Uh, whether Monday ends up coming down lower and running it, or it runs all the liquidity right on Sunday before it takes off, it's nothing more than a liquidity buildup. Monday creates the fake move. Anytime after Monday, New York is over to anytime Tuesday that New York is over, somewhere in between this zone, there's a high probability you are going to get a reversal. And Tuesday to Thursday will likely be your biggest and highest probable move of the week. So just to go over that once again, Monday's the fake move. Tuesday to Thursday is your real move. Sometimes the reversals do occur on Wednesdays, but for the most part, Thursday seems to be a very common reversal day. And Friday's kind of up in the air. Thursday can continue, or Thursday will pull back and leave liquidity for the following week, where Sunday will build up. Maybe Monday will come grab this liquidity and go, or whatever the case may be. Sometimes it's a week or two till Friday's liquidity is grabbed, but Friday is as much of a liquidity draw as Sunday is. It's just a matter of when do we come and get it. There are bearish models of this. There are models of this where we open on Sunday and we continue on being bullish on Tuesday, and we don't get that reversal and price just continues up. Usually by Wednesday or Thursday, you will still get a reversal. If for whatever reason, come Thursday, you have not got a reversal and market's just gone one direction the whole time, there is a very good probability that Friday is going to absolutely dump. The bearish scenario is the same thing. If the market just opens and it just continues on, usually by Wednesday or Thursday, we get a reversal. If we did not, there's a very high probability Friday will pull back. And where these zones pull back from are more or less liquidity points, which we'll get into in the liquidity section as we discuss other types of liquidity and how they're going to tie into our days and our sessions. So just so you guys know, this is the picture perfect one. The market's not picture perfect. What's important is understanding the model, the fake move, the real move, the liquidity storage for either next week or the week after. And Tuesday to Thursday is your highest probabilities of trades. And we'll get into sessions and timing in the next video. So for the easiness of this video, what we're going to do is turn on session breaks. That's in your settings. You can turn them on. They have a couple uses I'm going to show you guys in the future. And let's just kind of read PA. Maybe let's go back, start over here. All right. So So our Sunday open would be around. So market opens. So this is Sunday, just a liquidity build up. You could see before Sunday pulls away here. So Sunday opens, builds a bunch of liquidity, runs that liquidity, powers this move. Now somewhere in between Monday and Tuesday, we expect a reversal, and there's a high probability of that. If that reversal does not occur and price just continues on, the next highest probability day of a reversal is Tuesday or Thursday. If for some reason, God forbid, but if for some reason it just kept on going, there's a very high probability Friday will dump. All right. So now we get into Monday. Friday leaves liquidity here. Sunday opens, and Sunday actually doesn't run this liquidity. Monday does. But you can see Monday drives the price down, continues into Tuesday. Tuesday, we get our reversal. The move starts trending up, and Wednesday is kind of where our peak is made, and Thursday, price dumps. Now, if on Monday and Tuesday, Friday's liquidity is not swept, it will usually happen later in the week. So Friday leaves a bunch of liquidity parked right here. Monday does sweep a bunch of it the following week. Monday we get our fake move. Now we don't get a reversal on Monday yet. The reversal starts on Tuesday a lot of the times. But like I said, anytime after New York on Monday, there's a good opportunity for the reversal to begin. As you see here, we get our reversal on Tuesday. So Tuesday to Thursday being our real move. If price comes and makes this high and this demand is getting respected, the expectation is for Wednesday and Thursday to run this high. Now, usually Thursday is our reversal day. In this case, price just kept climbing the whole week. And you remember earlier in the video, we were talking about how price just kept climbing the whole week, and we did not get a reversal on Wednesday or Thursday. You could really expect one on Friday. I can guarantee you that this was a news week, and we can tell that's news just by that candle. So they likely drove price higher to grab liquidity. And if you look where price was driven to, a bunch of Friday's liquidity was taken. Price came up, didn't quite grab all of it. There's more liquidity here. But now what the market did is completely wipe this range. So we know the next time the market comes and tests this area, this high is weak. There's no liquidity left, so we'll likely smash right through that. But you can see how Friday's liquidity storage played into the following week when on Friday we come and get it. Now, we'll just put a little mark right here. And we'll actually see if this plays out. I didn't check this earlier, but hopefully this comes and gets Friday's liquidity and falls into our whole theory. So again, Sunday market opens. We get our usually what is a fake move. In this case, our move continues bullish right on to Wednesday. Remember Wednesday and Thursday being a very good possibility of a reversal. We get our reversal here on Wednesday, and if you just look at what the market did, we wiped this whole range of liquidity. So now we have a weak high with no liquidity. We have a weak high, no liquidity. So when the market does decide to revisit this area, we know that this high and this high has a very high probability of going. There is no inducement. There's no liquidity. There's really nothing for the market to stall at now. So yeah, we get our midweek reversal. Again, usually Tuesday to Thursday is your biggest move. Your biggest move here looks like you got a big move on Wednesday, which looks like you would have got into it somewhere in London. The next big move, which was the start of the end of New York, I should say. And that was about your big move. And the next big push came from London. Well, don't worry, we'll get into all this in the next video when I get into sessions. And this will all make sense. Now we get into next week. So Friday's liquidity here, and we have Friday's liquidity here. So Monday opens, likely a fake move. So remember what we said. There's a good chance anytime from Monday, New York to Tuesday, end of New York, that we'll get that reversal. This is Tuesday, end of New York. We can tell by that wick alone that there's a good chance this pulls up. Now, looking at this, if Tuesday is our reversal and usually our big move, and we get a reaction like this, there is a very good chance that this high's gone, and the rest of these highs will likely all get taken as they are all weaker. So just from understanding the weekly cycle alone, we can kind of guesstimate what the market can do and add that to a confluence. So here's our initial longs here. We get some more longs here, but Tuesday to Wednesday is our big move, or Tuesday to Thursday, I should say. Our big move here starts on Wednesday. Now, Thursday did give us a reversal. However, the reversal didn't really follow through, and Friday pushed price higher. Why didn't it get respected? We got all these news candles again. This was Powell and ECB on Friday. Euro raised the interest rates by 75 basis points. However, all their economic news came out pretty bad, so it initially shoved the market down, but on the longer trend, it's still an interest rate hike, so we are going up. So now, if we look to the left, weak high, weak high, weak high, the market weakened all of these highs for its future move, so that when this impulse happened, you were good to target all the way up there. Would I hold full volume up there? Absolutely not. Pay yourself along the way. But for a longer term projection and just using our weekly cycles the way we can, this can really help us strengthen our trading plan and just understand what's possible. And with where we are in the week, the majority of the time, if let's say Monday sells, it generally won't sell for 4 or 5 days straight. Maybe once every 5 weeks or something, but majority of the time, Monday's the fake move and you will get that reversal. Tuesday to Thursday's the real move, and Friday's kind of up in the air. And if you do get any kind of news, such as ECB or Powell, the market can do absolutely anything and doesn't have to respect anything at that point, because whatever they say can drive the market whichever direction it wants to go. As you can see, we went down and up, where initially, based on the news we got, the market could have just shot up, but it didn't. It kind of played both sides. But this gives us an overview of how to plan our week and understand how to plan using our daily cycle. Generally, the market changes direction every 3 to 5 days, every 3 to 5 weeks, every 3 to 5 months. That is programmed into their algorithms. We don't have any more exact data than that, but that's kind of the rule of thumb. So that's kind of how the weekly cycle ties into that and helps us basically get a more concrete plan of where price could go and why. As we tie in sessions and liquidity a little bit more, this will make a little bit more sense. But yeah, I hope you guys enjoyed this video, and I will see you in the next one for sessions.